Hello everyone, welcome to Shake Inside. If you want a quick summary, you can skip to the last part of the video. On Thursday, BankNifty formed a shooting star. It means the real body size is very small with 100 point. The upper shadow is 233 point and the lower shadow is 120 points. A shooting star pattern forms when the price opens higher, trades higher during the session, but then closes near its opening price, resulting in a small real body with a long upper shadow. The pattern suggests that the price of the asset is likely to fall in the near future. In this case, the real body suggests that the buyers were able to push the price higher during the session. However, the long upper shadow of 233 points indicate that the seller were able to push the price down significantly from the high of the day, suggesting that there may be strong resistance at the higher price levels. The lower shadow of 120 points suggests that buyers were able to support the price when it falls during the session. Overall, the shooting star pattern suggests that there may be bearish reversal in the near future, with the price of the asset likely to fall. But we have to keep in mind that it is a weekly expiry day as well as the last trading session of the week, because we had 3 holidays from Friday, so traders may exit the position and profit booking may happen. But there is one positive thing. FII and DII both were net buyers. FII bought for 475 crores and DII bought for almost 1000 crores. So, before confirming the direction of the Bank Nifty, we have to look into the global cues. Let me look into the European market at first. European market closed higher ahead of the 4-day Easter weekend, with the stock 600 index up by 0.5%. Bank and the travel and leisure sector performed well, while household sector and retail stocks declined. And Germany industrial production increased by 2% in February, more than the forecast, and UK house prices rose unexpectedly. The positive economic indicator suggests that the European economy may be performing better than the US economy. European Central Bank chief economist said that the food price inflation in the bloc was still rising, which added to expectation of another rate hike in May. Now, let me look into the US market. The US market were mixed. Let me look into the first positive things. Tech stocks lifted the S&P 500 and the Nasdaq was the best performer with a 0.76% gain. The Dow Jones higher by 2.57 points after losing more than 150 points at its session low. Okay, let me look into the negative things. The S&P 500 lost 0.1% on the week, posting its first losing week in 4, while the Nasdaq fell 1.1% and the Dow Jones rose 0.6%. The latest weekly jobless claims came in higher than expected, adding to recent signals that pointing to slowing job growth. Job cuts have also soared by nearly 5-fold so far this year from a year ago. Investors are wondering if the central bank has gone too far into the bid to cool inflation, tightening the economy at the point of a recession. Jobless claims lends credence to the idea that the Fed rate hike are beginning to cool down the economic labor market and slow down the economy. And the odds are much higher that it will cause recession, and even a significant recession that most people are currently willing to believe. Overall, the global cues are mixed, with a positive indication from the US tech stocks but negative signal from the job market and concern about potential recession. On Friday, non-farm payroll data were released. Let me look into it. The US Department of Labor reported that the non-farm payroll increased by 236,000 on March, slightly higher than the economist expectation of 238,000. Private sector hiring slowed while government payroll increased. The unemployment rate dipped from 3.6 in February to 3.5, driven by an increase in employment and a rise in labor force participation rate. Average hourly earning rose by 0.3% month on month and were up by 4.2% in year-on-year terms, near a 2-year low. The report is considered mixed bag for the May Federal Open Market Committee meeting, and the decision is likely to depend on the upcoming data, particularly the March Consumer Price Index report. Okay, now we should come to the Bank Nifty. What about the Bank Nifty performance today? Thursday candle shows strong selling pressure and now edges indicating gap up, and global cues are somewhat positive, so I assume the market may fall after opening higher. And I have given all the global cues to you. What do you think? Today the market will fall or rise? Comment your opinion in the comment section. Thank you for watching. Have a successful trading day.